Welcome to Bears in Exile. Today is Tuesday, April the 16th, and this is a quick hit on the indexes. So, we had a gigantic bounce on the indexes today. Um, we were looking for a bounce thanks to the 60-minute last night. I was hoping that it would not be this large. I was hoping that it would not exceed the halfway point of the big red candle from Monday. But as it turns out, that is what happened. And this isn't the end of the world for the Bears, but it certainly makes life much more difficult in hoping that this thing is going to go back down. Obviously, the halfway mark is first resistance of significance, so that has been beaten up. And the next one would be the top of the candle, which there's still a ways to go. Beyond that, what do we have to look at? Well, we started making another blip in the heat map today. I mean, it was a very, very powerful move, 100 and almost 58 points. But beyond that, I think that it's kind of, well, I mean, it can go either way, but I do think that odds are more in favor of the Bears at this moment. They should have at least one attempt to counter this. So I'm hoping that'll be tomorrow. And but if the Bulls have initiative overnight, it gaps up, etc., then the Bears are finished again. Beyond that, everything is pointing down with the exception of the RSI and the CCI, which did get a tick up today. But it's not the end of the world. It's a small thing. This could easily tick back down again tomorrow. The 14-day RSI moving average, of course, is moving down, along with the stochastics and the MACD histogram and the MACD. So I'm not going to get overly excited yet that the Bears are finished and the Bulls are going up. I do think the Bears will have an attempt at the lows. Hopefully a lot of it will be tomorrow, but we shall have to see. I'm going to go to the Dow Jones Transports for just a second, because this one has been very interesting. We were saying last night it was different in that it got below the entire bar, which was great. Today, getting back inside the long-term moving average bar. This does have some strength left in it, of course. We still have complete separation. It is taking significant damage, but it is not even close to being collapsed yet. I'm hoping that we can have our little bear counterattack, and that will really start to accelerate its disintegration. We don't have a good bottom on the heat map, so that's in the Bears' favor. We have most things moving down, just like the Dow, just like SPX, which we'll see in a moment. But the MACD histogram is slightly different. We do have a tick up. The CCI and the RSI are the same as the Dow. No need to rehash that. But overall, this is slightly better than the Dow. But by the same token, the damage that it's going to inflict if we can maintain down here is much better than the Dow. So positive and negative. Going on to SPX, and this is essentially exactly the same as the Dow. There's no need to rehash any of this. We shall have to see if we get that bear counterattack. But, I mean, on one hand you could look at this and say, oh, this is horrible. The Bears are, they can't do anything right. But we got down into the long-term moving average bar yesterday. Bouncing off of it is to be expected. So we did get that bounce. It just happens to be larger than what we were hoping for. So the idea now is it needs to go back down and sit on the bar and collapse it. Hopefully that'll happen. Maybe it won't. But regardless, that's what is needed at this moment. Going on to the VIX. Alright. This is a major disappointment. Maybe it's good for the Bulls. But let's examine this. For one, there's plenty of healthy things going on with this. We had a blip in the heat map yesterday. It obviously reversed. It was so outside the upper Bollinger Band. We said that it should pull back. We were hoping the 200-day would catch it. It did not. We have another bottoming blip today, which is decent for the VIX, but it's not red, it is orange. Beyond that, what do we have? Well, we have the Bollinger Bands that have stretched. So now, actually, the VIX has more room to move in a good way to the upside. So it's positive. So the 14-day RSI moving average and the stochastics moving up, and the MACD, which is very, very good. But we have a tick down on the MACD histogram. We're going down on the RSI and the CCI. Are these the end of the world? No, they're not. But, I mean, the CCI was so darn high, it needed to have some relief. Candle-wise, you know, this could be better. It gapped below the halfway mark on the big green candle. So it kind of cheated on first support. But since it's the VIX, it does that. If we were to exceed the bottom of the real body of the candle, yes, it's going to have some major problems. But yeah, we'll see what happens. This isn't the end of the world, but it's not great either. So, very interesting. I'm going to look at IWM since my TNA chart has changed, but I just like things that are totally consistent. I don't like charts compressing and expanding and splitting and all this other nonsense. So, another way to look at the same thing would be IWM. And you'll notice that this is very different than the Dow and SPX. This one should lead, and obviously it has not. I don't know, it's right at the middle point of the big red candle from yesterday. It's essentially where the close is. So has it beaten first resistance? No, it has not. So this one, in my opinion, is weaker than the Dow and SPX. We do have positive divergence in the MACD histogram, but it is still moving down along with the MACD, along with the stochastics, along with the 14-day RSI moving average. Excellent. We have no bottoming area here either. We do need to do more damage to the long-term moving averages, but you'll notice, unlike the Dow and like SPX, we are below all of the price consensus levels. So definitely this is bearish, at least at the moment. Maybe it could surprise tomorrow. There's still plenty of room to move, just like the Dow and SPX, on the primary indicators to the downside. So we'll see if we get that bear continuation tomorrow or not, and that'll be key, absolutely key. I'm going to go to SPY for our volume information. And look at that. We had our big nasty yesterday. On-balance volume came down to the trigger line. I was very skeptical. I would like to believe, but I was skeptical. And once you know it, once again bouncing off the trigger line. Unbelievable. Or maybe very believable. We still maintain 3 reds on the secondaries, and the primaries, no reds, still green. So, in that regard, we still have to give the benefit of the doubt to the bulls, and we're just waiting for something to trigger in the majors. And that's it. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you very much.